And we're live, guys. Welcome. I'm back in Stockholm. We have James. How are you doing, my friend?
Very good. Good morning. Just chatting to everybody in the community here. A lot of familiar faces. Good to see everybody.
Good to see you all. Thank you for being here. We have a packed agenda. We're going to talk about the Bitcoin dump, obviously. What is happening? Is it over, or is it time to buy, or something in between? And a lot of this is steered by what's happening on the macro side. We have the highest 10-year yield since 2007, 16 years ago. Against the streams, we have a few notable altcoins that I thought we could talk about. THORChain, Solana, Link, XRP, and perhaps a few others. Then we'll look at the bigger picture again. Are layer 2s dead when sharding comes? We'll look at TX backlog. We'll look at whether the DAO era is over. There was a notable ruling related to the Tornado case. We'll talk about Conado Canada suspending USDT and what it means. And of course, a lot of questions from all of you guys. And please remember to ask questions during the time, and we'll try to pick them up as we go along. Did I miss something, James?
Nope. We'll keep it flexible. I think, it was very cool last time. I think you were just fishing questions out from the audience as they came up as well, intermittent in the agenda, which I thought was nice too. Keeps it very dynamic.
That's great. Let's start with what's at the top of all our minds, I think. And that is the Bitcoin dump that we had here a couple of days ago. What's your take on it, James, first and foremost?
Well, first, these things happen. I think, what is it, off the mid-range year-to-date high? You got to remember, we moved a very fast distance in a short window of time. And I'm always very suspicious of dumps. Why do they happen? And why do they happen at certain levels? And why do they happen at certain times of the day? And what's happening behind the scenes? So I spent a long time looking at all the on-chain data, looking at all the big wallet movements. Wallet number 3 is a new wallet number 3, came out of nowhere and now has 118,000 Bitcoin in it in 25 days. Well, who is that? Could it be BlackRock? I don't know. Also, the time of the dump was clearly orchestrated. Somebody made a big sale exactly during the quiet hour that is between 1 p.m. Pacific and 2 p.m. Pacific, where there's no stock market on Earth open at that time. And that's when everybody kind of goes to lunch or goes to sleep or whatever. They nailed the time. And because retail is so distracted now as well with altcoins, we'll talk about some of those too. I don't think there's enough buyer pressure to bring it back up. So, it takes a time to just dump. It needs a lot of money to come back in that retail doesn't have right now. But behind the scenes, I can guarantee you 10,000 plus to 100K and 100K plus whales are gathering Bitcoin and have been aggressively, even over the last 5 or 6 days. So that's the big message here. People get scared and this stuff happens. And then they say, oh, we're going back down to 11,000, which is the new bogey from many people. I hear that a lot. And then 15,000. And we're going to break through the previous lows of the previous cycle. I now call it a previous cycle because I believe in a new cycle. And I just think it's funny. But we have literally landed perfectly at that 25.7, 25.688 level, whatever you want to call it. And we've stuck there and nothing has happened. So that looks like it's setting up as a pretty solid floor to me. What do you think?
Yeah, I think so too. I think what has happened now is that we dumped to the range bottom. This line here, which we touched almost on the dollar, wasn't new. That was the neckline from this inverse head and shoulder. And we went exactly to that point. So if price holds here and continues to bounce here between the range bottom, range top, range bottom, range top, range bottom, that doesn't mean anything. That just means we're ranging in this rectangle, in my opinion. But if we break down here, if we lose this support and are sitting down here and don't retrace, okay, then the target would be somewhere down at perhaps 20K. But that has not happened yet. That we have not broken this support. But if it does, that would be kind of the target from this construction. To answer the question that came in the comment, what are the chances that we go down? Oh, sorry, I'm not showing the chart. Sorry. Okay. Let me do that again. So we have bounced here in this range. It's maybe clearer if I zoom in a little bit. So we bounced from the range bottom, which was set by this neckline of the inverse head and shoulder. So range bottom, range top, range bottom, range top, range bottom. Nothing has changed. We're still in the same range. But if we break down here, then the target is like the range distance, which would bring us somewhere here around 20K. So if that happens, that's a different scenario, but it hasn't happened yet. And what are the chances we get to like 10K or 9K or 11K or something? That's a whole different ball game. We are very, very far from that. Then it's a whole different market structure, well before we get anywhere near those points. Then we would invalidate this inverse head and shoulder somewhere at 19K, and that would be a completely different situation from where we are today.
Yeah, and Mike McGlone is a guy who, you know, I've respected a lot, following him for a long time, but there, you know, this comes into the psychology of investing. Sometimes, you know, people are stuck in the past. He's been in the markets near like 1 or 2 years more than I have, and he's seen what has happened in the past, and he looks at old macroeconomic indicators like when interest rates do this and markets do this, there's a disconnect. So there has to be a huge pullback. And he's stuck in this perma-bear world like many others. This time is different. Even if you look at the markets today, you know, let me see. NASDAQ is up. Tesla is up over 5%. NVIDIA is up over 5%. These are big moves. These two stocks alone move the S&P 500 and the NASDAQ in a big way. And we have, it's just, this time there's a lot of things that are very different. We are driven by a different revolution, a different level of disruption. And people still go back to kind of PE ratios and growth rates and interest rates and discounted factors, and they can't wrap their heads around why everything is so different this time around between crypto and disruptive stocks. And that's why it's a great opportunity for us to be here, to be able to see beyond the traditional metrics that exist.
Yeah, I agree. I think we're on the same page. Let's move on and look at the macro factors, because at least short term, a lot of the movements are set by what's happening here with the yield, the dollar strength index, and so on. And if we zoom out a little and look at the 10-year yield curve, this is the US government 10-year yield. We are basically at points where we haven't been since 2007. And that is notable. And we were here once before, but this candle, if it closes here, that's higher than we've closed since back here in October, November 2007. And if we look at shorter time frames and the two-year yield, we're moving very close to a breakout point here. And traditionally, if this curve moves up, Bitcoin moves down, and vice versa. If this one dumps, Bitcoin goes up in the short term. What's your take on the macro and the yield? You've always had key insights here, and everyone have really appreciated it. James, what's your take? Are we going to break out here into higher yields, or what do you think?
Well, it's kind of at breaking point. So the problem with the 10-year, the reason the 10-year is so important, it's basically obviously what the US government pays in its 10-year bonds. So it makes financing very expensive for them. But most of the government financing is done kind of 1 to 2 years. But when the 10-year yield rises, it means that investors, of course, want more return on their money. They see signs of economic uncertainty, first of all. Second of all, the 10-year is considered the anchor that if you are trying to borrow money as a business or borrow money as an investor in real estate, that is kind of the anchor point for all pricing. So if you watch, say, the 30-year mortgage in the US and how it actually peaks at the same time that the 10-year peaks, it's because the 30-year mortgage rate is the 10-year plus, 300 basis points approximately at any given time. So you could take, say, 4.5% or 4.3%, add 300 basis points, that gets you to 7.3, 7.5, depending on the risk that the actual bank is taking. And it'll have, this is the thing that, the real problem is it does have a lot of negative consequences for the economy. Nobody can borrow money, whether you are General Motors or a small 10-person company. It's extremely difficult to get your hands on money, and money is the grease that drives economic growth, job growth, everything else. And what they're doing now, you don't see it reflected immediately in the markets, but 6 to 9 months from now, you will see the damage of this high interest rate. But not only the damage of the high interest rate, but the fact that the banks aren't even lending money out because they themselves have a huge problem.
Yeah.
They don't have deposits. They can't raise money themselves, and they are suffering from exposure to things like commercial real estate. So the whole thing is, it's really bad. And that's why I understand why people like Mike McGlone are very fearful, because he sees all of the signs of things breaking. But at the same time, things will be hurt. Businesses will be hurt. Commercial real estate is going to hit the wall. We all know that. But other things will still go up, like crypto and disruptive stocks.
Yeah.
Oh, and I forgot to answer the question regarding Mike McGlone. What are the odds of us going to 9,000? Unless there's nuclear World War III, 0. That's what I would say.
Yeah. I think so too. We have something else interesting to note, which I saw earlier this morning. This is something that we have all looked at. Now I need to share it again. The CME FedWatch tool, where we can see what market participants think the Fed will do for the target rates. Right now, the target rate is 525 to 550. And what's interesting here is that the majority of the market participants, look here, this is what they think for September. It's the same 525 to 550. November, 525 to 550. December, 525 to 550. January, 525 to 550. March, 525 to 550. And in May is the first reduction. So the market right now thinks that the hikes are over already, that there's no more hikes coming. Now, the market isn't always right, as we have learned. So this could be wrong, but this is actually the first time I've seen that. Now I've been a little offline a couple of weeks, so maybe this is not new, but it was actually new to me, because always when we have looked at this one on the DCAs before, there has always been at least one more hike in the future, but now there actually isn't any, as per the market estimates.
There was a big change last week where the new GDP expectation for the US is over 5.5, 5.6%, which took a lot of people by surprise. So for some reason, despite all of this, the US economy is still growing. And I think it's a factor of what's happening around the rest of the world. So China is shrinking and they're having deflation, which is the kiss of death. Germany is having a hard time. Even where you are, Sweden is having a hard time. The UK is having a hard time. The countries in Europe that typically are weak are strong. And the ones that are strong are weak. Everything is kind of upside down. So it is an interesting situation right now. Now, I do think they're done with Fed hikes. Even if they were to do another 25 basis points, the damage is already done. And I think something will happen. There will be a liquidity crunch, a credit crunch. Something's going to break. Another bank will hit the wall, and then the Fed will cut. And they're already actually printing money behind the scenes as well with different types of vehicles, like the BITFP program, whatever it is, the bank bailout program. That's still being tapped for money. So printing is happening. And the most important thing too, and this is what I kind of don't understand. We're going into a US election year next year, and the Fed is doing a lot of damage to people and businesses, and voters will not forget that. They will see what they've done. And all the talk of, oh, we've got to bring inflation down to 2% is just all bogus, because if you go into a store, again, I always look at the price of apples. and they keep going up. The price of blueberries keep going up. They're like more than double than what they were 2 or 3 years ago, and that is the reality that people are facing.
Absolutely. I think everyone can see that the real inflation has been a lot more than calculated. Very, very interesting developments. If we look at the agenda, I thought to show this one. This is this tool that I have where I can quickly see the trend on daily basis for different coins. And what we see at a glance here, that's why I included this, it's that there's a lot of blue here, which means the blues or down. And there's very little gold, which means up in my vocabulary. So,
and gray is flat, I assume, as well.
Exactly. Gray is like inconclusive. It means that there is no trend. And so this is just a random page. I haven't selected these based on any specific criteria, but it's definitely a situation that most of the projects are in downtrend versus the US dollar and versus Bitcoin at this point. And then there were a few that I thought we could talk about, the ones that are actually going against the overall stream. And it's in this view here, of course, those are not the only ones, but just for the purposes of this video, I thought we could talk about the Rune, THORChain, SOL, Solana, which is also an uptrend, and Link is actually in uptrend as well. XRP is neutral against dollar, but it's actually an uptrend against BTC, and a lot of people are interested in XRP. So I thought we could possibly touch on that as well. And if I switch back here to the chart and we look at Rune, I'll just 1 second, bear with me. So Rune or THORChain is one of those projects that had a huge straight up run in the previous season in the late November 2020 to March or May 2021. And then it kind of started going down. This looks like small movements, but this is like from 20 down to 0.8. So this is a huge retracement. And then last few days, there has been a big move up. We can see it both on the USD chart and maybe even clearer here on the BTC chart, that something really happened. Here, a lot of people have asked about this project, perhaps because we talked about it previously. Is this a project that you have followed?
Yes, followed it very closely, and it's kind of interesting. So I could talk for about 2 hours on Rune, and I've been watching it. I've never actually bought it during the last cycle. I think it had 2 hacks or 2 exposures, 2 big dings. And after the second one, it got beat down to a very low level. And I had a limit order for it, and I missed it by 1 penny. And I remember that very distinctly. But they've been making very good progress on their roadmap. They've done some new things. From a technical perspective, you'll see as well, MACD integrator crossed into the bullish zone, RSI exploded, and that's kind of what happens with chains. Now, there's a couple of things that are really, really impressive. One is like Nakamoto coefficient, I think, is about 28. Their tokenomics have gotten a little bit better. It is the world's first really cool trustless multi-chain DEX, which I like. It has things called the Savior's Vault and Pendulum. But what I don't like about it, and what's always kept me out, is the team is anonymous. We don't know who the backers are. There are unlocks. A huge amount of the tokens are centrally controlled by the team. There's some missing data. It's a governance token. We'll talk more about that too. So that's always kept me out of this. There's just too many unknowns that would give me confidence to even put a penny into it. So that's where I am with Rune.
Oh, very interesting. Yeah, I think I've also covered it on a few videos previously because I've felt it's interesting because it's the only project that can actually do layer 1 swaps without yeah, for real, without centralizing it in.
Yeah, I call it a trustless multi-chain DEX, which is maybe a bad term for it, but
yeah,
that's how I see it.
and I think the reason for this, or one reason for the renewed interest, is that they introduced some new features that Farizon asked about here, streaming swaps, which basically means that if typically on a big DEX like Uniswap or something like that, big players have to divide the order into many small chunks to not move the price too much in one go. They have to wait for arbitrators to come in and kind of equalize the pool before doing the next part and so on. And they've kind of streamlined that so people don't need to do it on chain, but it can kind of be done in the background to achieve a similar thing. And I see they also introduced some lending. So it's definitely an interesting project, in my opinion, and they've clearly got renewed interest. Then the second project that is in an uptrend on both the BTC chart and the USD chart is one of our old favorites on this channel, which is Solana. And do we have any new insights on Solana from your side?
Well, I think the newest insight is the fact that the world is waking up to the challenges with Ethereum and layer 2s and an alternative, many, many years later. The DeFi has really come back. The TVL has come back for Solana. The breadth of dApps is second to none. They've got tons of new projects. They got that whole DePIN business stuff, which is extremely interesting with Hive Mapper and Helium, etc. Also, I think the biggest interesting thing, I think it was a week or 2 weeks ago, the amount of institutional interest has exploded. Like the amount that institutions have put into Solana, it grew by over 10 or 11% just in 1 week. And that's over the whole history. Like the total assets under management went up by 11% in the space of 5 days, which was very, very interesting to see. I think as well, the roadmap that they have, with Fire Dancer and other stuff coming out is super interesting. If they nail Fire Dancer, that's it. That's game over for many other things. And there's a lot of other positive technical outlook, a lot of adoption. Tokenomics is good. Decentralization is good. It did get another scare with the SEC saying it's a security along with Cardano and Matic and other things. But I think people now realize that the SEC is a corrupt organization. So that's where Solana is right now.
I think at least, especially on the BTC chart, this is very interesting. It fell down below this support twice, but it climbed back up, and now it's back over support again.
Yeah,
this looks very interesting, actually.
Yeah, year to date, if you look at year to date performance of Solana against pretty much anything else, apart from a few other names like Injective, etc., it's done really well.
Yeah,
and that gets attention.
Let's interject with a few questions. What cold wallets do you guys trust? With all the FUD on Ledger, I wonder what cold wallets to go for. Yeah. And I think a beginning is to understand that it is a good idea to have your own wallet. As many people learned last year, having the money on the exchange doesn't mean that it's your money. It's the exchange's money. And if they go bankrupt, the legislation just isn't in place to protect the depositors. The money remains the exchange, the exchange's money. What's your take on the choice of wallet?
Well, I've probably done more wallet analysis than any other channel. I have a whole series. So what we've done is we've broken out wallets across users, and think of it as a persona-based guide to wallet buying. I would go to my playlist on wallets and security. And if you are self-custodying Bitcoin, literally, you have to think of yourself as a bank. You have to think of kind of bars on the window and thick glass and big, thick walls, like in the old days in the cowboy movies. The strongest building was always the bank. If you are your own bank, you need to build the strongest building. And the choice of wallet is very dependent on who you are, what your security needs are, how much technology sophistication you have, etc. So there's no one answer. But literally, we have analyzed, especially since the Ledger fallout and all the stuff that's happened over the past year or so. We get so many requests for wallet reviews, and we've done pretty much every single wallet that is worth considering. But I do stress one thing: make sure the code is open source, make sure it's easy to use, make sure it's a reputable team and it's been around for a long time. But there's no one wallet that would do everything you need, especially if you're here on this channel. You're probably into some altcoins as well, so you're going to need multiple wallets, and that's the truth right now.
Thanks for that. I agree. If someone can be paid in BTC monthly, is it best to convert to USD than use DCA on steroids, or just stick with set and forget? I mean, of course, if you're paid in BTC monthly, you're already DCAing in, I suppose, if your salary is set in US dollar and you're just paid in the BTC currency. So that's not a bad way to get in, for sure. How close to the halving should we short the BTC miners? Yeah, that's
a great question. Yeah, so I'm watching that carefully. I don't know if you, CTO, if you play the miners, but I've always played the miners, especially since the last bull run, because they are just fascinating. So if Bitcoin, say, does 100% return, the miners often do 400%. But you don't want to be left holding the bag. So the timing is very, very important. I think what's going to happen, Bridzini, my plan right now is literally up until March 2024. Watch what's happening. Anything that looks like it's a house of cards and it has a high price, I'll short the hell out of it. And on the other side of that trade, just in case it does run up, I'll have an equal-sized hedge in what I believe to be the winning miner. So that's my strategy for those miners. But I'll think about March 2024. Simple answer.
Very interesting. Let's continue with the altcoins that were trending up. The other one, the third one that was on that list was Link. That's also something that many people ask about for good reasons, because if you were there early, Link was one of those projects that went on this chart. It's from $0.12 up to 50. That's 500x. And actually, there was price before that also. That doesn't show before it was listed on Binance. So this is one of the projects that went 1000x. And it went in a very clean parabola. And looking at the BTC chart, that was even easier. It went in a straight line up 1000x, basically. Then the parabola broke and it's gone into this kind of downtrend. But on short time frames, we saw now that it's trending up. And from a technical perspective, this chart has gone into a well-defined range or rectangle. And the actionable event would be if it breaks out on the upside. Or on the downside. It broke out on the downside once, but it was a fake. It came back in, and it's still in that range. So that's the technicals of this one. I wouldn't do anything based on flips inside this range. It needs to break out from the range with a trend pointing in the same direction. What's your take on Link? Is it a project you're following?
Yes. In fact, I didn't buy it, but I did say I put out an alert back in June. I can't remember the day. It was around the middle of June 2023, not too long ago. And Link went down to like $5. And I said, this is a screaming buy at $5. But I'm not buying it because I have a very strict discipline that I can only have so many horses in my stable. I like to be very focused. I don't want to have 60 different tokens. So I didn't buy it. But I was kicking myself because literally within weeks of that, it went from $5 to $9. And I was like, ugh. But now it's down around $6. And what is very interesting about Link is I think their tokenomics have gotten a lot better. Their inflation used to be terrible. Now either they fixed that, or it just, due to the Lindy effect, it just got better. And their CCIP, it always makes me think of CCCP. Their Chainlink cross-chain interoperability protocol is super interesting, where now for the first time ever, it'll drive a lot of token usage, especially as they link kind of TradFi to crypto as we go forward, across smart contracts and transfer tokens across different blockchain networks. I think that is a super interesting project. Put it this way, if it falls another dollar, I'm buying. I have my alerts set up, but not now.
Yeah, I agree. And the fourth one that was on that list was XRP. XRP is interesting, and it's on the same, it's at the same price that it was in December 2017. It has had these ups and downs, but largely it's been very much ranging against the USD, and even more against BTC. If we look at the BTC price, it's the same today as it was 2014. So, which is very interesting. That's 8 years ago. So, XRP, looking at the technicals, it's also in this range. It's just on the range boundary. It broke out, it fell down again, and now sitting just at support. What's your take on XRP? Is it?
Oh, I make myself very unpopular in the cryptoverse by calling out facts against certain tokens. But if anybody knows me, they know how I feel about this. But it has a very strong army. One of the problems with XRP, it is, when I first came across it many years ago, I was like, how is it legal that they're even doing this? They have like 52 billion tokens in escrow. They dump them on retail quarterly. That's why there's no price appreciation. When you look at the market cap of the chain, they have like, I don't know, a couple of 2,000 daily active users, and it has a huge market cap. And the inflation is ridiculous, even after 8 or 9 years. That's why it's just price suppression from hell forever. And if you look at the people that pump it, that's all you need to know. Watch who pumps it and who they're aligned with. So do not be a bag holder for, again, the tokenomics and what we call the compendium score is the same as ApeCoin. So you're better off buying ApeCoin than XRP. But people are holding out for this hope that, oh, well, in the future, XRP will be kind of the method by which all payments will be made globally with big banks. Well, even if that is the case, that'll be a deal with Ripple. And it will not accrue to token holders. This is what people don't get. Like if say, crap token X builds CBDCs for governments, you're not going to see any of that adoption in your bag. This is just, that's like, oh, wow. Yeah. And the other thing is, for me, it's kind of personal, because the reason we're in crypto is we don't trust central banks. And then people buy tokens that support central banks and central bank digital currencies, which are spy coins with reversible transactions and everything. It's just, I don't know. Yeah. Everybody just needs to do more homework and figure out exactly what's going on, and not just listen to others, but dig into all the information is out there. You just need to dig a little bit. Spend half an hour on Google and you'll learn a lot about these tokens.
Absolutely. I'm not a fan of XRP either. So let's go back to the agenda. We talked about these ones. Then let's press on here. Layer 2s. Are layer 2s dead when sharding comes? This comes back a little bit to a discussion we've had several times here. What's the architecture? Someone asked if we can, zoom out, look at the bigger picture. I think we often do that on this show. And the thinking here is that sharding then can drastically increase the capacity on the layer 1 network, and maybe that plus more clever applications on top eliminate the need for layer 2s. What's your thinking here? We chatted a little bit, James, you and I.
Yeah, well, this is always fascinated me. So I spent a lot of time, we're talking 30 years, looking at technology and technology companies, and I was always confused by layer 2s, because layer 2s exist because the layer 1 doesn't do what it's supposed to do. So I always called it a band-aid. Now, that being said, back in the last bull run, I did invest in Matic, for example. I think it was probably the only layer 2 I invested in, because I saw huge adoption. Tokenomics was not perfect, but the adoption overcame that. Now we're seeing what's happening, when you look at bad tokenomics, you can see that the price will really underperform over time. And we're seeing that with Matic right now. It was trading at like 50 something cents the other day, maybe even today. But what's happening right now is technology, and this is more of a technology conversation, so I'd like you to chime in here a little bit as well. But the layer one blockchains have become far more advanced, far more stable. Yes, we know Solana had their outages, but they had their outages for many different reasons, like DDoS attacks, etc. You've got SUI, tokenomics are absolutely horrific, but they have fast technology. You got Aptos, same thing, tokenomics horrific, fast technology. You got Near Protocol. They all exemplify this trend that, wow, these new layer ones have the potential to do something. And the trajectory is for the market to recognize this fact. So I think when sharding, if it does come, that'll take ETH 2.0 with sharding to 100,000 transactions per second, which logically, again, from a technology perspective, that will make all of the layer twos redundant. Okay. And then when you look at the layer twos, I mean, there's so many issues across things like finality and cost and fees. For example, I've been watching Base, and Base is a super interesting case in point. It is there, and people always say, "Where do I buy Base?" You can't buy it. There is no token for Base. It's from Coinbase to help them scale using blockchain. But their fees were $10 a transaction yesterday. Think about that. That's huge. And when it comes to, again, finality is very, very important in kind of stock market applications. They're just not going to cut it. And now L1 has more stability and really driving a lot more adoption. So I think keep an eye out on, like, I don't want to give advice, but think about divesting. If you are a big bag holder of layer twos, divest into some of the key layer ones going forward, because as this happens and as sharding comes, I think the layer twos are screwed unless they find a way to survive and become layer twos on other layer ones that have challenges too. That could also happen.
Yeah.
But the problem is you're just layering complexity on complexity. You're layering fees on fees. It's illogical to me. And that's both my gift and my weakness. What do you think?
Yeah, I think that we don't really know how this is going to go. There's a lot of smart people, Vitalik, Buterin, a lot of smart researchers working on Ethereum, and things have changed many times. I actually read again today, and now it says there that shard chains are no longer needed and have been dropped from the roadmap. And there is this new concept that I had actually not read about before.
Yeah.
Dank sharding. I studied a little bit more today, and it's more like a complement than to other technologies and so on. So it's to kind of support rollups, which is quite different from the original sharding. And I think my conclusion from this is that we don't know really how this is going to go. And everyone who is so sure of which specific technology, we don't know that. This keeps changing, and I think it's good to keep an open mind. I'm not convinced of the layer twos, as we have said many times. I think there is a complexity problem, if nothing else. And a lot of different attack vectors. Perhaps can be solved, perhaps it will remain too complex.
Yeah, that's so important. Attack vectors, and Ethereum is amazing. It is the 800-pound gorilla that everybody needs and uses, but it's older technology. And again, it's got, imagine a submarine. It's got so many little holes in it and little tapes and plugs, and they keep on trying to fix it and make it better, and then running into roadblocks because so much is already built on it. It's very difficult to change the wings on an airplane while it's in the air, and that's what they're trying to do. That's probably why they now have dank sharding, the new version of sharding.
Yeah. So that's my take. We're not sure. We don't know yet. Let's press on here. Bitcoin TX backlog. And the background for this discussion is that there is indeed increasing backlog that we can see here. If you look at the mempool transaction count, this is the 1-year view. It's the blue line here. You can see that it has been trending up. And we can really see that this is a 2-year view of the mempool space. We have had mempools before, but we have to go back to 2021 to basically see these kind of spikes, and also in the peak of late 2017 and 2018, when Bitcoin was also basically stuck. People couldn't move their Bitcoin for days and they were panicking and so on. So we are in a period of increasing mempool and unconfirmed transactions. Unconfirmed transactions now is 342,000 transactions. What are your thoughts, James, seeing this? It's of course, we talked about it a couple of months ago with the ordinals and so on. What do you think?
Well, again, as a crude Neanderthal, if you think of blockages and pipes being blocked, I go back to real estate, and when pipes are blocked and they back up, it's a very ugly situation. But back to Bitcoin, I think there was something like 400,000 unconfirmed transactions. The fees are still low, but they've got a little bit higher. I think the average fee is about 85 cents now per transfer. But I get concerned about, all of the megabytes of block space that has to clear. The hash rate's still high. And when I look forward to adoption and, we go to, say, 50 million daily active users on Bitcoin, what's it going to do? How are they going to scale to that? And I know they have layer 2s in Bitcoin and Lightning and everything else, but that is a concern. And, people say, oh, it's because of ordinals, but no, the ordinal stuff completely slowed down. It's non-existent now, that inscription stuff. So I get concerned about that too. Every chain has a problem. Every chain has a weakness. There is no perfect chain. But that is a bit of a concern. And as we go forward, as the halving cycle comes up, I see more adoption coming onto Bitcoin, more stuff being built on it. And I get, honestly, I'm a little bit concerned about these blockages. What do you think from a technology perspective?
Yeah, I was there at that time, 2017, and saw people's Bitcoin being stuck for 2 days on the chain and so on and so forth. We have, let me share this again. So looking at the fees, as you said, the fee per transaction is not that high. It's still less than $1. It spiked here, right? In when was it? In May. Where it really surged, and we had $6 transactions for quite a while after, but that has reverted exactly as you say. And we've had basically these 3 spikes also in fee per transaction during the past 6 years. So, and I have said it many times. I feel that crypto as a whole and Bitcoin in general, we're not ready for 50 times as many users or 100 times as many users. If we succeeded, suddenly the whole world watches DCA live and they realize Bitcoin is the best, and they go tomorrow and they're as sold on Bitcoin and crypto and blockchain technology as you and I are, James. And they go on chain and they do the same thing that everyone else do that's already in crypto. Then the whole thing is going to break. It's not going to work. Bitcoin will stop working. People's transactions will be stuck. Fees will go through the roof on both Bitcoin and Ethereum and basically almost all other chains, and things will break. That's what's going to happen. We're not there yet. We need more infrastructure for this to scale to everyone on the planet. We're not there yet. We need either Lightning Network or a better blockchain for this to scale sufficiently. That's my
opinion. And in fairness as well, there are smart people that anticipated this. I listen a lot to guys like Jack Dorsey over the last couple of years. He knows. That's why he puts, many millions of his dollars of his own money into the development of Bitcoin and supporting the developers, because he sees, okay, this is a very valuable blockchain, but it's also quite fragile. and therefore he is well aware of some of the weaknesses down the line. So no doubt the team can do stuff, but this should be a wake-up call for them that they need to figure out these blockages and scalability real soon. Because when April 2024 hits, it'll bring about more interest than Bitcoin has ever seen. And if during the quiet slumber months of August 2023 we're having these problems, it's going to get a lot worse.
I think so too. Let's press on. We had a few other interesting developments. I wrote here DAO era over, and that was because there was a US court ruling related to this Tornado project. And it basically, the defendants had said that because it's a smart contract and it's just software, it's freedom of speech. And they refer to that it's a DAO, it's not a company, and so on. But what the judge said here then was basically that it doesn't change anything that it's automatic. It's like a vending machine. A vending machine is also automatic. And the fact that they call it a DAO doesn't change anything if it's a bunch of people with a shared interest and operating basically like an association or organization. So I'm sure this will, I'm not a lawyer and I haven't really read the ruling. I just read the article, but I can understand the argument. And I've always felt that the whole DAO idea to just call something DAO, but actually they're still operating pretty much as a company, that's not going to work. What's your take on all this?
It's funny because this actually relates to what we discussed earlier, and the team at THORChain are actually quite clever, and that's probably why they are anonymous, so they can't be caught. So when you talk about these DAOs, I've always thought DAOs are money grabs, but this court case, basically, it's a U.S. judge in the OFAC case, basically said a DAO is a person. We can pierce the DAO veil. He didn't say decentralized in name only, but that's what they are. They're decentralized in name only, and they've always been silly due to legal uncertainty, their legal status, security risks. We've seen so many situations where DAOs have been hacked, etc. And then governance. The governance is a freaking joke for all of these things. So again, DAOs are always nonsense. I always, people ask me 1,000 questions. Should I buy this DAO? Should I buy this DAO? I say, nope, crap, money grab, stay away. And that's DAOs. So it's good to see this happen because there is probably one or two DAOs, and the use case of a DAO for blockchain is a real use case. It's just it's infantile right now, and they need to be structured very correctly as we go forward. Yeah. So that's my take on DAOs.
Exactly. I also think without, having any legal knowledge, just thinking logically, I think that what sets a Bitcoin apart from some random DAO is that Bitcoin is actually decentralized. There isn't a de facto CEO or a marketing team working in an office in the Bitcoin headquarters. That doesn't exist. It's actually decentralized. And I think similar to quite a few other projects, but just calling a new project a DAO isn't going to help anything. So that's my take on that. Then I think it's still ridiculous to arrest that developer. I guess I don't know if he's still in jail, but I think that's rough to arrest some developer for writing code and publishing it on the blockchain. But maybe there's more to the story. I don't know. Let's continue. We had another thing that caught my eye, and that was that Coinbase Canada suspended USDT and a few other stable coins. And first, I kind of perhaps read more into this than there was, because I myself had forgotten a little bit that Coinbase and Circle is the issuer of USDC, actually co-founded much of the USDC effort already back in 2018. But is it about that, or is there a crackdown on stable coins as such happening in the Western world? What do you think, James?
Yeah, I think Coinbase is probably the most regulated, most rule behaving exchange of any. And I think they're just trying to make sure they don't get on the wrong side of the Canadian authorities in this one. Also, some of those stable coins, there's some funny games happen behind the scenes as well. Like I never heard of RAI until now. DAI, I know. Tether, I think, is actually pretty safe, although they probably did some shady stuff in the past. So I think it's just Coinbase protecting themselves and staying the right side of the Canadian government, because they are probably one of the few exchanges that Canadians up there can actually use right now that are centralized. I think Binance is out of Canada, if I'm not mistaken. But not being in Canada, I'm not too sure exactly what's happening on the ground up there. But I think it's just Coinbase behaving themselves.
Yeah. Let's take a few questions on the remaining time here. BTC back in 25K range. Let me show this again. I actually haven't drawn the range at 25,000. The range bottom here is at 26,000. The range bottom here is drawn at 25,200 approximately. That's where this neckline developed for this inverse head and shoulder. So even though it went from 26,000 something to 25,000 something, that doesn't change anything in my analysis. And I saw another question earlier, noted that the trend here is, if today's candle close here, this trend will change to blue. But we're still in this range. We can bounce around here any number of times. What we're looking for is a breakout of this range with the trend pointing in the same direction. That would be an ideal advice. I don't want to make this video a TA video. I'll probably talk more about this tomorrow, but that's short answer to that question. Not so keen on Trudeau. I'm not a politician, but I have.
Yeah, we saw some strange things happen over the last 2 or 3 years up there, which I never expected from that country. It was like,
I never
wow.
thought so either.
Wow.
I have some friends. So reversal. Let's see, where did that one go? Here. Let's see. Reversal timeline prediction. So I guess reversal means, Nas, you mean reversal on the back up or back down? I think that there hasn't really been a reversal. We went up from what I think is the major bottom, and then we're consolidating. We're still consolidating there. What's your take, James? And Nas, you can clarify your question. Back up.
Yeah, exactly. I think you just need to zoom out. Like, when are we going to get back to 30K? And the question I always ask is, who is selling at this level? And the answer to that is, I know who's accumulating. The people that are selling are people with 10 to 100 Bitcoins. They're the ones that are getting out. And they're typically people that actually diversify into altcoins or other assets. They could be selling their Bitcoin for a layer 1 or a layer 2 or a disruptive tech stock like NVIDIA. Who knows? That's what's going on right now. We know Bitcoin is going to go to 40,000 by April 2024, conservatively. As I said before, half the miners could be out of business if Bitcoin is not at 50 to 55,000 by May 2024. So the only way is up. So the question is, who is selling? So the reversal, I think we need to get out of the summer doldrums, the summer slump that we're in, that we expected we'd be in. We are here. That's why CTO goes off on vacation at a perfect time.
Yeah, exactly. Nothing has happened. If we look here, if we zoom out a little bit, you see it clear. I think that this was the major bottom based on what we know now from the chart. And then since then, which was basically in March, nothing has happened. From this point, nothing has happened. We've just been in this consolidation range. There is no reversal. This is just a consolidation. Then we have to play it from here, but that's where we are
It's a beautiful little ping pong. It reminds me of the game as a kid. People used to play on little simple computers, that goes, you move the slider and move the ball up against the wall. Things like breakout. That's exactly what it reminds me of. So yeah, and it was very comforting as well to see how that 25K level held. That shows you basic things is there are people there that didn't fill their bags during the dip, and they've been biting their fingernails for the last 6 months. And now they get the chance to at least get some Bitcoin at 25K. I know hundreds of these people, and they are all of their limit orders at 25K. So this is where retail buy pressure can actually keep that as a floor. And then you look at the whale accumulation as well at the same time, that I have a lot of confidence in this level that you have there at the 25,000. But again, everything can break.
Yeah.
Nobody has a crystal ball. If some black swan happened, who knows?
Exactly, we don't. Is the BTC dump a common occurrence with stocks in the stock market? Can whales at any time set up shorts and dump stocks, or is there regulation prohibiting this type of manipulation? You can go first, James.
Yeah, there is regulation preventing kind of market manipulation. Also, when you look at, say, stock market for big assets, there is a huge amount of liquidity. So it's very, very difficult to move a big asset that has a few $1 billion in market cap. Now, that being said, there are things that can happen that can dump price. If you look at MicroStrategy, Michael Saylor said, okay, I'm going to sell $750 million worth of MicroStrategy to buy Bitcoin and some other overhead, etc. That, when you hear that, the price is going to dump because they're increasing the amount of shares available, which is diluting the actual value of the share. And I calculated by about 13%. So that should all be kind of more or less nearly done now. But no, the crypto market and Bitcoin is still the Wild West. And because it's decentralized, which is a good thing, it means the whales can still play these games.
Absolutely. And while there is regulation in the stocks and regulated space, there's a lot of legal manipulation that is permitted that many people are not aware of. One example is buyback programs. So a company like Apple can go out and say, we're going to pump the price of our stocks, so we're going to take 5 billion of our money and we're going to buy the stock with that. Then price probably going to go up, and so on and so forth. And this is legal in the stock market. And then also large players tend to go on interviews and talk about how bearish they are, and so on. They can still buy with billions in the other end, and these kind of manipulation are very much allowed and commonplace. So the big players, they manipulate the market within the boundaries, and there is actually a lot of things they can do, and they do. Let's proceed. How much BTC does the US have left to sell from previously confiscated BTC? Yes, good question. They still have quite a bit left last time I checked.
Yeah, at least 60 to 80,000, and they're selling it in $20,000 to $30,000 tranches. So I think they sold one or two tranches, and I doubt it was the US government selling because there was no movement in the wallets. You would have known about it. So, but yeah, they still have more to come, and then Mt. Gox is coming up too. So there could be a couple of combo events that could take us below the 25K level, but it's all about timing of when it happens.
Exactly. Several people are saying BTC dropping. So one thing that can be worth noting, and good insight on short time frame, if this one points down, you can be almost sure that you can go into here, US 02 yield, 02 Y, which is the US government bonds 2-year yield, and find a candle pointing about the same length in the other direction. Lately, that has on 19 days out of 20, that has been the case. So if this one goes up, Short time frame, this one probably pointing down. That's why I said that that's why we said before that if this one has a major breakout, if it breaks out and parks itself here, that is not good for Bitcoin price on the short term. Then perhaps it breaks out of this range on the downside. And similar on the US dollar strength index, or the DXY. If this one moves up, Bitcoin tends to move down. And this one has been in a major significant uptrend since mid-July. But if this channel interpretation is correct, it could face some resistance here. If it does and starts moving down, perhaps we'll see Bitcoin starting moving up in its range. So this doesn't predict anything, but it's clues to try to understand what is happening with Bitcoin on the short term. I think long term, very long term, this is not correlated. If we go back like 5 years or 7 years or something, there is no value to be found in this. But on short time frame, on a daily basis, I find this useful. Any final questions, guys? We're 2 minutes overdue. Anything else, James, you want to bring up?
Yeah, it's just summer slump. Beware. It's a very weak time of year always, and don't get too nervous. You know, once we get through September, things will be a lot better, and you'll see things move very fast. Just keep your seatbelts on for this particular stage of the season.
Exactly. Big whale, I'm going to market sell 20k BTC washout. If we get to 20k, I'm going to be the first one to buy there. That's for sure.
Yeah, that's when you look behind the sofa to collect the pennies. Exactly.
Okay, we're over time. Thanks a lot, guys. If you are not subscribed to James's channel, of course, you should do that. Links are in the description, but I'm sure you are already. And next, some people asked also, where is Ivan? He is just traveling, and he'll be back next week. So I guess next week will probably be on Ivan's channel.
Yep.
And
awesome.
See you all.
Thank you all. Have a great week, everybody. And seatbelts on, of course. More volatility ahead.
Exactly.
Thank you,
At least something is happening. As a trader investor, it's a lot more fun when there's some action and it's perfect timing. Nothing happened while I was away. Now action starts and we're back. Thank you, guys.
Good stuff. Bye all. Thank you.
Cheers. Bye.